Welcome back. Hope you're having a good morning. For starters, the SGX Nifty is suggesting a gap up with a gain of close on 70 to around 80 points, currently around 60 points odd on the back of the Fed chair's commentary overnight. But let's focus on a couple of stocks and sectors, and we'll discuss that with our guest. Deven Mehta will be joining in just a bit. Cement stocks, they're going to be in focus because yesterday the finance minister said that the panel is likely to relook at the taxation, the GST tax on cement. Remember, as of now, it's around 28% odd. Jeffries has come out with a note. They say it'll be good because it could push volumes. The cement prices come down, volumes will be pushed through, though it will also result in pricing coming down by around 7 to around 8%. It's a positive in the near term for pricing, though, is what they mentioned. So good for volumes, though cement prices could come down. Before we go to Dipan, let's hear out what the finance minister, Nirmala Sitharaman, indicated that the government is open to considering a reduction in this 28% GST on cement. Let's hear out.
On the GST, the end user in non-bulk cases, you're talking about individuals. Bulk cases, of course, it can be government, it can be projects which are being undertaken by private sector as well. I see your point. Let's say I'll have the fitment committee look into it and then, if necessary, take it to the council.
Well, Deven Choksey of KRChoksey joins in on the show. Hi, Deven. Thanks so much for joining in. Well, Deven, cement prices, if it comes lower, then it could push through volumes. So this GST cut, it could be a long drawn process, first of all, because the finance minister recommends it to the panel, then the panel takes it forward and then sees whether or not this recommendation is in order. And keep in mind, if there's a cut of closer on 10%, rough estimates that are pulled out suggest that 10 to 15,000 crores of loss to the government as well in terms of GST collection. Your view on this move, and do you think it could actually happen? Because I heard this a couple of years ago as well, and at that point of time, it didn't happen.
Hi, Nigel. Good morning. Well, I would think that there is a case for reduction in GST. And maybe I think in many commodities and many items, I think it should be the possibility. Primarily two reasons, as I see it. One, our government is having sufficient amount of cushion now with the higher collection on a sustainable basis of close to 1,50,000 crore per month. Given that kind of a situation and given the increase in the economy and the size, along with the volume increase in different commodities, in my viewpoint, I think it probably makes sense to bring down the rates to, I think, a little bit more parity level, which would eventually help the cost of construction and cost of infrastructure coming down. Should that happen, then in that case, I think it's a benefit to overall, I think, participants whoever I think are involved into building the infrastructure into the country. As far as I think the impact on the cement company is concerned, I'm not too sure immediately, I think, whether I think one can count on impact. Because the volume increase in cement is largely the case for the spending which is happening either on housing side or on the infrastructure side. We are clear rather on this particular aspect that there is going to be a case for higher consumption of cement, given the kind of thrust on infrastructure that the government has continued, including in this budget announcement. So from that perspective, I think we find that the cement consumption would be increased and that could possibly neutralize the revenue loss that the government may have made, I think, in the process.
All right, Deven, stay with us. I just want to highlight and get your views on Paytm. This is interesting because, the stock at one point yesterday was up 10%. It ended only about, I think, 5% higher, 5.5% higher. These are the three new things, right, which have happened since. The EBITDA was the EBITDA positive was ahead of schedule, and that's why markets liked it. But there are three new things this morning. Macquarie has double upgraded the stock, and that is important because Suresh Ganapathy, the analyst at Macquarie, was firmly negative on the stock. Is widely tracked, well respected. He's done a double upgrade. I think he's got a price target now closer to 900, 800 something, but closer to 900 now. That's number one. Nimesh yesterday pointed out that on D Street Chatter, his segment, that perhaps there is another block coming in Paytm. So that's point number two, and that is important as well. If you are, if there is, if you're trading, I think this kind of thing becomes important. There is another block which perhaps is coming. And number three, they've this morning, I think, released the January business update numbers. I've not gone through the details, but I think they look fairly decent. So just a couple of things. which, not couple, but three things you need to note on Paytm. I don't know, Deven, if you have a view here. Many do believe that, after the kind of price damage it has seen, it's possible. I mean, you see 30, 40% kind of trading rallies. We've seen those before and would not be unusual. Your sense?
Yes, Prashant, I think from 700-800 crore worth of loss per quarter to bringing it down to 300 to 350 crore worth loss per quarter, I think is definitely, a signs of improvement. And I think one would probably look at, this improvement in a very positive manner. Of course, I think the other aspect of the business, which is distribution aspect of the business, which is possibly resulting into the better margins for the company, and I think allowing them to cover the loss in a systematic manner is, very interesting to watch out for. Whether it would sustain and whether it would grow, I think that would remain important. And the loss-making pockets like retail and others, I think whether they would continue to be there in the system, as far as the company's operations are concerned, I'm not too sure on that aspect. However, I think would like to see if the sustainable aspect of the improvement into the profits and break-even situation as the management has predicted. If that happens, then certainly at least some amount of stability will come into the price. Not too sure how much participation it would invite immediately from the investors.
Okay. Deven, good morning. I wanted your thoughts on how one should approach Bharti now post the numbers. Of course, there was that, loss that hit the bottom line this time around. So the profits were under a lot of pressure. But on an average, most brokerages continue to have a buy on the stock. Target prices anywhere between, 900 to 1,000 on Bharti, whether you look at CLSA, UBS, etc. Your thoughts, if you do see a dip, is it an opportunity to buy into some of these telecom names?
Yes, Sonia, good morning. Well, I think the downside certainly remains limited, and because the prospects for upside, are definitely counted here. On one side, the ARPU increase definitely, is something which the company has been talking about, and they are now actually seeing the ARPU increase happening for them. With the correction in the tariff, the subsequent quarters also you are likely to see the better ARPU from the company. Also, at the cost of Vodafone Idea, they are also acquiring new customers. And this new customer acquisition in this quarter also has been, a very smart number that the company has ended up acquiring. A point to remain a little bit more cautious would be that the company is in a capex mode, and this capex mode is likely to continue for a longer period of time, as I see it, because 5G rollout and related infrastructure, which is required in the order of the business conditions currently. In my viewpoint, I think that could possibly keep the profit under suppressed to a certain extent. So I think these are the few points on which I feel that yes, downside is limited, but maybe you can see gradual upside with the increase in the ARPU and improvement in the profits.
All right, Deven, what about the steel pack? Tata Steel, normally for quite a few quarters, you see Tisco doing the disco. Unfortunately, this time around, they disappointed, and I'm looking at a lot of notes. There's earnings cuts out there.
Did you make it up yourself? Yeah, Tisco doing the disco?
I've used it quite often on the channel as well. Where Tisco does well.
That's the first time I heard.
The problem is there's no disco for the next couple of quarters because Europe is going to struggle. Deven, what's your view on the stock at around 111 rupees? So sometimes you like Tata Steel because of the parentage, because they're backward integrated to some extent. But Europe is a spot of bother, preventing them from going on the dance floor. Your take on the stock?
So in last 2 quarters, I think they've had the rough patch, largely because of the higher input cost. And as a result of which, I think a significant and a sharp fall in the commodity prices globally, of course. Because of that reason, definitely in the last quarter, the company had to adjust, the inventory at the net revenue valuation, as they call it as. Given that kind of an accounting adjustment that they did, I think definitely last quarter, that was not good. I think they made the loss. But now the situation is really stable. Crude oil prices are stable. Commodity prices are relatively stable. China has opened up. I think there is a good demand, coming up on that front as well. And at the same time, I think the margins are unlikely to remain on a negative territory side. So given that kind of a situation, I would rather like to believe that the Tata Steel kind of performance will be relatively stable to better going forward. However, commodities are most vulnerable to the global situation, which we are probably experiencing currently. So one can't be very confidently saying beyond the quarter about how exactly the performance would likely be.
All right, Deven, stay with us. We have to take a quick commercial break here. Let's do that. We are back. But before we slip into that break, let's just quickly run you through what's lined up in the next 30 minutes as we come back. We'll have